Yo, what is up? This is Cowboy. It is 6:32. I should say 8:32 AM EST on Thursday, and I believe we just got the PPI data out. So we're going to probably jump straight into the charts here. Give me just one moment. If you have any questions about what we do, go to that QR code top right-hand corner of the screen. Zap that. We teach people how to build trading algorithms, right? Now, this doesn't mean that you have to know how to code or anything like that. It's just simple, trading methodology. If you trade, you're probably already using an algo. And like I said, we'll probably get into all that kind of stuff a little bit later. I'm just going to prep my screen here so we can jump on and take a look at what's happening to the dollar based on the PPI. Now, PPI is part of a series of economic data that come out once a month, right? Let's get that screen shared. There we are. Whoa, what's going on here? This is interesting. Give me a sec. Oh, I see what's going on here. Sorry, folks. There we go. Now you can actually see what's going on. So look at this big, pretty decent size move down. This is on the 30-minute chart. You're seeing price head downwards, and it looks like it is based on the PPI, but it looks like it was actually front run a little bit. Let's go to the 5-minute chart, right? And let me zoom into present time. Now you're looking at the EUR/USD. This is the euro versus the dollar. And in this case, it looks as if the dollar got strong. And so in comparison, the euro got weak, right? So even though this is a chart of the euro versus the dollar, because the dollar gets strong in reality, what it appears to do is have the euro get weak. That's how that works. So looks like we got some people here in the comments. SG Booyah, Meb Vet, good morning. Thank you for tuning in. Glad to have you here. Let me go ahead and put this link over in our private chat as well. I forgot to spread that link around a little bit. Give me 1 second. So what we're going to assume here, I haven't looked at the data yet, only because it just came out, but we're assuming that CPI was hot rather than cool. And that would make sense because the CPI was just a hair bit hot on, the CPI was hot on Tuesday. PPI probably hot today. Let's take a look here. March 14th. That is today. Core PPI. Let's refresh the screen. Okay. We got some mixed data. PPI a little warm. 0.3% versus 0.2%. Retail sales is actually lower. So mixed data, right? PPI actually, that came in pretty hot. Month over month PPI as opposed to core PPI came in twice the expected. So if you go ahead and look in here, this is the change in the price of finished goods and services sold by producers. That change in price was twice as hot as normal. That's actually significant. However, retail sales was under the expectation, and employment was actually higher. I should say unemployment claims were lower, so employment was higher than expected. That's all a bunch of mixed data, but the PPI is probably going to have the most weight. So CPI is measure of inflation for consumers. PPI is measure of inflation for producers. And when inflation goes up in the current environment, that means the dollar gets strong. Okay, when the dollar gets strong, anything traded against the dollar gets weak. Let's see if this was affected. If we're seeing this affecting crypto. Crypto is so strong right now, we might not see any kind of effect. It might be that, Bitcoin and so forth just chug along. And it appears that's the case. Not much change over in crypto. I think at this point, with Bitcoin being as strong as it is, I think it would take a significant overshoot in either direction for on the PPI or CPI to make a difference in crypto. Certainly, Bitcoin is headed down against the dollar, but it's been doing that all night long. So it already was on a downward trajectory, and that's not really changing very much. So it's fortunately, crypto is not being affected. However, the Forex market is. Let's take a quick look at the equity indexes and see if that has an effect. Nope, E-mini is chilling. No change really on the E-mini, not seeing a big change on that. So as a matter of fact, the E-mini is headed up. So just not a big change. And the market is not very volatile right now. In general, the market is pretty quiet. So whatever changes we might see in this data, unless the data is a big overshoot, then there's a good chance that there's not going to be a big change. And we got the mixed data, retail sales data and unemployment claims all point, or I'm sorry, let me back that up. Retail sales data show kind of a bit of weakness in the economy. So that would mean dollar down. However, PPI and unemployment claims all are sort of economic strength indicators right now, meaning that they're saying, dollar strong. So you got a lot of this data fighting itself. So that tells me that probably within a pretty short period of time, this data will be digested and the market will be relatively tradable on a low time frame. Yeah. Now that we're looking at the E-mini here, which is basically the SP 500, we can see that since about 2 a.m. my time, so 4 a.m. EST, we can see that the price has been in a bit of a consolidation. So it did deviate just a hair right here around 5 a.m. And that being the case, we might see a price continue up. That's kind of what it looks like. Let me take a look at a higher time frame. Yeah, no, it's bullish. And I think we saw like all-time highs yesterday, the day before. Let's take a look. Let's look at a high time frame here. Let's clear this screen up. About to hit my target that I actually put out. I don't even know when I drew this target, but this is an S&P target that I drew some time ago. And that's a fib at about 5,300 or so. And it looks like the S&P is about to hit that. So, another target. And this first fib extension, 5165, already met. So it does look as if, let me see, I can tell you up to here. So I drew this probably back around mid-February. So mid-February, I did some fib extensions and it took about maybe 2 to 3 weeks for these targets to get met, right? So equity indexes look like they are strong, though, all-time highs from what I can see. As far as I can tell, these are all-time highs. And the Dow is probably in the same boat. So that's like the mini Dow. It's ETF. It's pre-market open, so 3,900. So we're looking at about Dow 40,000. Let me zoom out to a higher time frame. I don't really trade or pay as much attention. There was a time when I traded indexes, but we're certainly at all-time highs in the Dow. And the Dow is about to hit 40,000. And V the Gorilla did predict Dow 40,000 this year. And here we are. I think his words were Dow 40,000, print the t-shirt, right? So, we at Algo Factory have been talking about this for at least a year. Yeah. So it's happened. Here it is. Everything's just going up. And I'm not saying that the end is near. It seems as if, look, the more economic strength we see, the less likelihood of interest rate cuts are we going to see, right? So the stronger the economy, the less effect these interest rate cuts have had. Interest rate hikes, right? So last year, and I think the end of the prior year, Jerome Powell had been hiking the interest rate. Okay, he had been hiking the rate in effort to slow down the markets because of all of the inflation, because of the money that we injected into the economy, really on a constant basis, but especially the hike up in that during COVID, right? And NASDAQ also at some record highs here too. So now all of that money going in during COVID, a lot of that money, and just in general, what's going on around the world, there are multiple reasons for all of this. All of these prices going up, inflation everywhere, and of course the inflation is being reflected in the stock market with all-time highs and with interest rates being hiked up. So if you think of it this way, when you hike interest rates, you're making money expensive. And when money is expensive, less people borrow. And less people borrow, less money goes into the market because all of our money is based on debt. But you can see here that these candles are getting small. This is the NASDAQ, by the way. This is a NASDAQ trust, the Invesco QQQ. And so when these candles get really small, it means that there's not a lot of volatility. And when it does seem as if the VIX is being crushed, and the VIX is a volatility indicator. And it seems as if there might be a relationship between, oh, this gets a little complex, folks. But let's just say that all of the machinery, all the financial machinery around the world might be aimed at stopping volatility. And when you have no volatility, that means price won't really go anywhere. So if you can get price where you want to get it, if you can force money into the economy, put prices where they want to go, and then somehow kill volatility, that means that whatever direction price goes, it's not going to go in a very strong way. So if you can put price where you want it and kill volatility, it's pretty much just going to stay kind of right there. And that seems to be the theory. Okay, so on to Bitcoin. Let's look at Bitcoin on a higher time frame and get a good look at that. Obviously, we won our Solana trade. I went ahead and posted that on X. Bitcoin is hanging out right there around this like 72, 73,000 level. Does not appear to want to come down at this point, not in any significant way. It does appear that Bitcoin is just going to continue up for now, at least algorithmically. I see no reason for Bitcoin to slow down, right? Just looking at the algos here. It's just mobbing up. That's all there is to it. I mean, you're always going to get some pullbacks, right? And every so often you get a surprise pullback. We're looking on a daily chart right now with Bitcoin, and there are going to be liquidity grabs for sure, because as price heads up, people are going to go long. Okay, so they're going to go onto the leveraged markets and they're going to say, okay, I think price is going to go to, let's just say 80,000, and then price starts going up, and so they go long like right here, and they put their target way up here at 80,000. And then right below there, they're going to put their stop loss just in case price goes down. They're going to limit their risk, right? Well, sometimes because of all those stop losses being right here, the market makers see that and they can make money by pushing price into stop losses. That's one of the ways they make money. And so price goes down and grabs that liquidity, right? So speaking of liquidity, let's go ahead and map out liquidity using the Kingfisher.io. And if you like this tool, which you really should like this tool, the Kingfisher.io has a lot more going on than just liquidity, right? You can subscribe. They're pretty inexpensive, very inexpensive. But as you can see now, you can get free credits by spinning the wheel. They'll give you free credits for getting, liquidity, right? Just got to get lucky and win. And if we go ahead and maximize our liquidity screen here so you can see it, give me just a moment. Okay, so let's get a liquidity map for Binance. And this is going to tell us where those leveraged trade liquidations are, right? Where price has to go on the leveraged exchanges to grab that liquidity. And that's what market makers do. They push price into those nodes. This is a high leverage look. There's a lot of liquidity up just above 73,000. We'll keep that in mind, but I want to see all leverage. Okay, so price is at this green dotted line right here, and there is a lot of liquidity sitting at 70,600, 68,000 or so, and about 63,000. 68,000, 63,000. Let's mark those out. Here's 68. Here's 63. And then what did we say? Right at about 70,500, we'll say. Okay. Now, in this environment, there have been lots of liquidity nodes down below, and price simply has not gone to them. Okay. Price just keeps going up. But these close ones, that's where you're kind of more likely to see the grabs. But even so, you do get like we got on the 4th of March, where price really, really dug down, actually the 5th, to be honest, or to be accurate. Price dug down and grabbed that liquidity and then just simply kept going up. So as long as that liquidity profile remains, as long as these trades stay on and these liquidations stay in place, there's always that chance that price can very quickly and violently dive down with a nice fat Hitler candle and then grab them and then head back up. That can happen just like that. That can, that's very possible. I would probably think that it would be more like this rather than this, but either way, Either way, if there's a lot more liquidity, if this really, really builds and a lot of people go long and a lot of stop losses, liquidations, I should say, are at 63,000, then price will go down and grab that. And then it'll probably just keep going back up in the current environment. And this is what we've been talking about. Everything that we have said is going to happen has been happening, right? Everything we've said is going to happen for years, but especially right here, just to do a quick review of what we said was going to happen. This is back in the kind of the end of December, beginning of the year, going through the end of January. We had this big consolidation. We had the ETF punch up, and I did say that this was going to be a sell the news event. And I said that for freaking months. And sure enough, it sold off, I want to say about 20%, right? Now, what didn't happen yet or hasn't happened yet is a pre-halving sell-off. I mean, we could look at this as it, but this is a little early if you look at history of halvings. If you look at a Bitcoin halving, which is supposed to happen in about a month, usually within that month beforehand, within a few weeks beforehand, you get a, say, 20 to 30% sell-off. We haven't seen it. We may not see it. This is only based on a couple of data points, not a very strong thesis. However, the odds are that we would see a sell-off. Not this sell-off that you're looking at on the screen, but another sell-off should happen, but it may very well not happen, right? It isn't like we can look back to 100 halvings and say, oh man, 100 times, like, say 90 times out of 100, there's been a sell-off. We've only had like 3, right? And one of those is a weak data point. So I'm not counting on a strong sell-off at all. I'm not counting on it. It could easily happen. 20% sell-off from 72,000 would be down to, say, about 50. What is that? 14, so 12, 4, 58,000. So 20% be down to 58,000, and then 30% would be down to about 50,000. That's what that would be. If such a sell-off were to happen. So, that being the case, I think the gorilla might be coming on soon. I'm just getting some DMs from him right now. But the whole point here, though, is that you do see a bit of kind of a wedge formation. So there is a case to be made for things to slow down, at least temporarily, right? You have this rising wedge type formation, which tends to break downward. But again, this is crypto. And what we're being told from the institutional side, which Via the Gorilla is on that side of things, is that the large companies are simply just buying more and more. They're just buying more Bitcoin. They don't care about pullbacks. They don't care about price. They don't care about anything right now. They just want more Bitcoin. And part of the reason is that when you have these BlackRock types in the game, they make fee-based income, right? They know, or at least they're very confident that Bitcoin is going to continue up regardless of what they do. So they know there's a bit of a supply shock right now, right? There's a lot of Bitcoin being bought by these, BlackRocks of the world, the Michael Saylors of the world. And so when you have that kind of a supply shock and these transactions are relatively public, people are starting to think, oh shoot, man, maybe I should get my Bitcoin while I still can. And so there's a real likelihood that even though there's a lot of case to be made for a 20 or 30% drop, or even a drop down to 63,000, whatever your number is, there's a good chance it would just keep going up, right? So I'm not worried about that. My own personal strategy, and again, this is not investment advice, but my own personal strategy is I hold and don't sell a lot of my crypto. I have a small bag that basically it's a company that I trade for, and I can trade for that company, that very small, comparatively small bag of crypto. It's thousands of dollars, but I can trade that to sort of hedge or to make extra gains on the way up, on the way down. But besides that, I don't sell. So if there's a move down to 20 to 30% and it goes right back up, I'm not going to get caught out. I just hold that crypto because I'm pretty sure we're going to see price go quite a bit higher. So I'm going to open this up to questions because we are getting towards the end of the live lab. Let's see here. Yeah, end of the live lab. So we'll look at the Solana trade, and we'll say we'll see where it might go next. This nice extension took us to our targets, and like I said, I posted this on X. It's a beautiful trade. It took about a week to get going, right? So I got into this trade here. Looks like back on Wednesday, March 6th, right? So a little towards a couple weeks ago, whatever that was. And it did take a minute for it to break out of this consolidation. Price did run down, grab liquidity. Let me map this out. So, grab liquidity and then headed up. And of course, I had a well-placed stop. I anticipated that price might head down to grab this liquidity here. And by the way, this move down also was coincidental. And I mean coincidental in the strictest of terms, happened at the same time as this Bitcoin liquidity grab. Right. So when Bitcoin went down, it took Solana down, but there was liquidity right here. So people probably, I'm assuming, I mean, the charts are telling us this, but people probably just kept buying Solana once it got this low, right? And this is why my stop loss was right there. And it did take a little patience. I'm not usually in trades for a number of weeks. That's not my style necessarily, but in this time in the bull market, it's not the worst way to go. And you can see that this paid off. 272% gain. You can see the risk reward ratio right there, 2.72. That means for every $100 I put in risk, I make $272 if it goes to target. For every 1,000 I put in risk, that's $2,720. For every 10,000 I put in risk, that's $27,200. So it's a beautiful way to trade. Look, you can do that. I mean, a lot of people who trade in crypto feel like they need to buy crypto and then wait for it to go, 100%. And they need crypto itself to double in order for their gains to double. But that is not the case. When you trade in this manner with these measured moves right here, you can just more than double your money. I almost tripled my money on this trade. Whatever money I put into this, I almost tripled. It doesn't mean that I put my entire trading bag in this, though, right? I didn't put 100% of my money in it. That would be idiocy. But I put a bit of my money in this, right? And that bit of money doubled. Just like that. Actually, it went almost 3 times, 272%. So what we do is I took this trade in front of the Algo Factory audience. They saw me take it, and a lot of them took a very similar looking trade. They did their own research. They didn't use my trade as some kind of investment advice, but they did take a very similar trade. They saw me get into it first, and I did end up sharing this trade after it was well into profit. So anybody who is watching, say, on X or these morning shows, you were also able to see this trade go down before it completed. So it's just a good way to do some research and maybe even find yourself a trade. So pretty awesome stuff. We have a few minutes yet left. I'm not seeing a lot of comments. If you have a chart you want to see in crypto, if you have, hey, I want to see what this coin might do, what that coin might do, go ahead and ask. Now's the time. I'm going to go ahead and take a look at AVAX. AVAX actually has been about as profitable as Solana, and it's just it's been a quiet kind of version of Solana, right? And look at it now. This is awesome. SG says, see you on the other side. Lovely. Yeah, we'll see you. We'll see you in the private lab. That's happening soon. Now, I did mark this trade out. I marked this trade out for everybody to see, like right here on this channel. And anybody who took advantage of this, they would have had to enter back here, right? Now, this is what happened. I said price would dip down, and I said price would head up right here. It actually dipped down the same day that I talked about it. So what I drew here did happen, and this trade is now effectively in profit, right? It just got down to that level sooner than I thought it would. So this is a 3.43. This is a 343% gain should this trade make its way all the way up. So yet another nice sketch out win right here on Algo Factory, right here for everybody to see, right? I did this first in the private lab so that they could see that this would happen. Now, they would see it, do their own research, maybe take a trade that looks like that. Anybody who's seeing it now, let me mark this line out. Actually, anybody who's seen it right now would see a 158% gain, right? But anybody who saw it when I first entered it would be at about 350% gain, something like that. So just wins after wins over at Algo Factory. Go ahead, zap the QR code on the top right-hand corner, okay? If you zap that QR code, you're going to go to our website. You're going to see what we do, how we do it. You're going to understand that what we do is help people learn how to trade. If you don't know anything about trading, we can help you out. We're our class is geared to people who know a little bit about trading, but even if you know nothing, we have brand new traders who never traded before who come to our class, and we will teach them the basics and we'll help you find the basics online. This trading is something where you have to really want it, and a lot of it is just learning by osmosis. Just come into our classes every day, asking questions. We can answer your questions live. We're live 5 days a week. 5 days a week, we're live. You could just come on in and ask questions like, hey, how does this work? Hey, how does that work? And we can, even if it's basic questions, we'll answer it because there are other people who have those same questions. We're happy to answer those basic questions. And we have an online university you can access 24/7 that is going to answer a lot of those too. Trading is a massive subject, and there are many different ways to trade. So, of course, this is not a get rich quick scheme to come over to Algo Factory to build your own trading method, right? This is something that it's going to take a little work, going to take some time, and anything worthwhile does. People don't learn to trade overnight. It takes some years, usually. It took me, I actually did really well immediately trading, right? That's just because I got into crypto when it was really easy to make money. And then when the crypto market changed, I was still trading that old way and I lost some money. Fortunately, I made a lot more than I lost. But I actually had to retool and I had to learn to actually trade. Even though I had made a bunch of money trading in 2017, 2018, I had to learn how to trade after that because I realized that the markets change. So, long story short, instead of taking 4 years to be profitable, you can come over to Algo Factory and have a chance at taking way less time to be profitable because the gorilla and I have been doing this for a while. And so we can kind of see where the problems arise. We can see where a lot of people make mistakes in their trading journey, and we can help them avoid those mistakes. And if you build your own trading method, if you build your own algo, then you will have tested that algo. It will have your personality imbued upon that algo, meaning that it's yours, right? So not only is it your personality, right? Not only is it a way that you would trade that you're comfortable with because you're the person who constructed it, but also you have tested this algo. You have the psychological confidence that this trade will win. And I can tell you right now, most people, including myself, the failure I have in trading, if I ever fail, like if a trade goes bad or if I make a mistake on a good trade, if I make a mistake, it's like almost always psychological, like 99.99% of the time. And your best traders in the world make mistakes on trades, like all the time. I don't care what they tell you, but the mistakes are almost always psychological. And the way to strengthen your trading psychology is to build your own algos. Come on over to algofactory.tech. We're going to jump over to the private live lab right now. So those of you over at Algo Factory, I am going to turn on the private stream right now, and we're going to end it here on the public live lab. But to hit me up on X if you have questions, you can find me there. That's the way to go. And let me go ahead and tell you all what happens if you don't join us. Just kidding. This is only a joke. Here you go.
Join us or die.
All right. Thanks for watching, everybody.